All right. Back in the action here once again. We're not done with you yet here tonight. Almost finished up with a busy day. Hope you guys had a great day out there. It's about that time of day again, though. Time to get back to work. Time to get ready for tomorrow, because tomorrow is a finally Friday's trading session. And as always, right, Thursday evening, it's May the 9th, 2019. My name is Joseph, as always, and this, of course, is your nightly newsletter. Now, don't forget, guys, I help traders find predictable, dependable, usually profitable trade setups using a simple 3-step trading strategy that we teach and trade together every morning in our trade room. But remember, my job is a little bit different tonight. My job tonight is to identify the best levels, the best situations, the best setups we'll be looking for and hunting for tomorrow in our trade room. And I'm going to grab oil, S&P, Nasdaq, gold, and euro in the video tonight. I'm going to jump into that black gold, though, first, that Texas tea first, because lo and behold, it looks like oil is right back where we came from this time last week. And boy, I think that oil market right now is trying to pick our pockets. We better be ready for this, because I want to make sure I can let's dig in. Let's jump into that oil chart here tonight. And let's take a look at what's happening here right now, because I don't want to get too far ahead of myself. First of all, most important clue right now on this chart, it's a range. Nice big range-bound market. We go up, we go down, we go up, we go down, right? This is a range-bound market. Range-bound markets tell us what? They tell us to buy low. They tell us to sell high, right? Sell high, buy low, and what else? Avoid those middles, right? Avoid those middles. So where are we right now? We're almost right in the middle of that trading range. So I have a pretty simple plan right now on this oil. I want to get down so I can buy it back up. I want to get up so I can sell it back down. And you know where the target is, right? Yeah, like I mentioned earlier this week, right? We're going to probably finish tomorrow, unless something crazy happens with the U.S.-China trade negotiations. That 61.86 level is going to continue to be, right, our price magnet. So for tomorrow, I'm hoping we can stay away from this middle, right? Get down so I can buy it right back up. Get up so I can sell it back down. I'm also going to talk about the specific entry patterns I'll use tonight, right, for those buys and those sells. And also, too, right, how do we trade a breakout? What would a breakout pattern look like on this chart tomorrow? So we're fading breakouts, we're trading breakouts. I'm going to dive into this, right, head first tonight on this oil chart. So make sure you stay tuned if you're an oil trader out there. How about some S&P? S&P and Nasdaq, boy, quite the week it's been here, right? It seems like it's one headline to a Twitter, right? To a Twitter post, to another news release, right? It's just like, oh my goodness. Everybody's back and forth right now regarding the news of the kind of fallout between the negotiations, right? The trade talks here between U.S. and China. I personally still think we haven't heard the end of this. I don't believe, you never know, right? It's very difficult to tell who to trust right now. Let's put it that way. And I still don't think we know all the pieces of this yet. So I'm anticipating, right, another big leg to this market tomorrow. And I hope I'm right, because we have potential for some really big moves tomorrow. China says they're not budging. The U.S. says they're not budging. They need each other, right? Let's be very, very honest, right? China needs the U.S. Needs China. They're going to figure something out when that does happen. Will it happen tomorrow before that deadline, right, for the trade tariffs going up 25% tomorrow, end of the day tomorrow? I don't know. But I know tomorrow is probably going to be a day filled with more fireworks, and I want to be ready for that. Knowing that, right, here on the S&P, strong move up, right, into a trading range. The range is the most important factor right now on the E-mini. It's a bull bias into that trading range. Bull bias tells me I want to buy below the low of that range, and we'll talk about a couple key patterns. I'm looking forward to do that. But at the same time, though, right, with this overall bullish bias to it, I also want to be open-minded to trading a breakout, right? Now, breakouts have a tendency to fail, right? Just look left and you can see most breakouts are not going to succeed. So I have to be very, very careful trying to buy that breakout. I'm going to talk about my favorite breakout patterns for you guys tonight on this newsletter. And of course, could we sell off that high? What if it goes up? Could I profit from it as it collapses back down? Oh, absolutely. In fact, we're going to talk about that pattern as well because it's setting up right now on the euro for tomorrow morning. So we'll talk all about buying low, buying the breakout. Also, of course, we'll talk about how to fade those breakouts higher. I can't wait to dig into this S&P chart here for you guys because, again, like I mentioned, I don't think we've heard all the details here yet about this trade negotiations. We're going to probably hear some more details overnight into tomorrow. So I'm expecting to see some more fireworks here on Friday. Over on the Nasdaq right now, Nasdaq is very similar to the S&P, but very, very different in some very important ways here. First of all, get that big move up, right, into a trading range. Nothing different there, right? That's the same stuff here. Got a bull market into a range. I want to buy down below that range, right? I want to buy down below that range. Now, here's where it is a little bit different, and that is we have some falling resistance. Now, why is falling resistance important? We're going to talk about that tonight on this newsletter video because it really tells me which patterns are going to work best and which patterns I really need to stay away from. So we'll talk about that in a moment. I also know, obviously, this potential big leg higher here could put us all the way back up around that 76.90 measured move here tomorrow. But again, how can I trust those breaks higher? We're going to talk about how you can trust the breakout or what you'll look for to sell it back down in. I got a lot to cover here tonight on that NASDAQ, so stay tuned on more for that. And then over on the gold, out of all of the markets in tonight's video, I'm going to say gold is probably going to be the most difficult for tomorrow. You can definitely tell that everybody is kind of on edge right now about these trade talks between the U.S. and China because gold, as you can see here, had quite a fussy day today. Most important clue right now on this gold is we are still dealing with this bull market into a trading range. Every time we go up, we end up right back into that range. And so I have no reason to think anything else. I assume we're going to end up right back down into that trading range here tomorrow. The only problem I see on this, though, let's see if you can pick up on the problem here. The big problem I have with trying to sell this market right now, there are actually two problems right on this chart to be a seller right now. One has to do with this trend line, right? And the other one has to do with that leg right there. The trend line's pretty easy. You can probably figure that one out without me, right? Especially if you watch my newsletter every evening. However, though, right, the big problem I have right now, and more importantly, the biggest clue, I think, to tell us exactly where to look for the sell signal is that strong leg higher. I want to be a seller back down into that trading range. Then we can look to buy it right back up. The problem is I've got that big strong leg, that trend line, and those two clues right there tell me pretty much all I need to know where and where not to be a seller. And remember, sometimes knowing what not to do is more than half the battle. So on gold, I want to sell off that high. I want to buy off that low. I'm going to talk about which sell patterns, which buy patterns, and we'll break the whole thing down on that yellow metal here for you guys. And then don't forget about that euro, right? I always love when the euro gets nice big moves here. Euro, of course, now, let's kind of recap here, been stuck inside that trading range, right? We've been talking about buying low, right? Everybody seems to think this market's bearish right now, and it might be bearish in the long term, but in the short term right now, though, it was very obvious in last night's newsletter. We were looking for this market to go higher, right? They make that run back higher now, right? And now what happens? They hit the measured move, and what do we see? We see the buyers try once, the buyers try twice, and we're looking good here to start looking for a sell. But wait a second. We've got another problem here. Rising support trend line. That rising support trend line tells me, watch out. I've got to look for a very specific entry pattern right now. The same type of setup we're waiting for here on gold, right? So gold and euro are both in very specific situations. Rising support trend line. Big green run going higher. Okay, I want to be a seller going back into that range right now because as many of you mentioned on our YouTube channel overnight, the euro is overall bearish. And so I do want to see that sell back down. I've got some great sell opportunities for us here on the euro. And obviously here, if we can get back down to the opposite side, right, we'll look for the buy going back in. So selling off the high, buying off the low. We'll put the plan together tonight here, right, on this euro as well. So we get everything covered here. Got the euro, gold, Nasdaq, S&P, and of course, we can't forget about that crude oil. But before we jump in and put the whole entire plan together, I want to make sure you never miss another great newsletter. And to make sure you're always the first person on the video every night, join our mailing list. It's really, really easy. Just give me your first name, a real email address, and then hit that subscribe now button. And then don't forget, check your email, check your inbox, your spam folder, your promotions folder in Gmail, right? Check those folders, because a lot of times when I send you that welcome email, when you register for the list, I'm going to send you a welcome email with a lot of good stuff on there, right? So make sure you check your email to verify I have the right email address and to give me approval to send you that email every evening when our nightly newsletter goes live. So I really appreciate that. Join the mailing list. That way you've got the information right as it comes out. And then one last thing here, guys. I always, always, always need your help. You know me, I spend a lot of time every evening making the charts and doing the video and getting this newsletter out to you guys in a timely manner every evening. And I've been doing it for over 10 years here at School of Trade. Go back and look for yourself. One of the longest running newsletters on the planet, right? Let alone day trading on YouTube overall. I need your help though. In order for me to keep doing this better every single day, I need your feedback. What do you love most about this newsletter? How do you use this video? Do you watch it before you trade in the morning? Do you watch it after you finish up each evening? Do you watch the whole video? Do you just skip to your favorite market? What do you love? What do you hate? I want to know what you love most about this video so I can do more of that in my next videos. And I'm always listening to you guys. So if you would, drop me a comment in the comment section. Let me know what you love. Don't hold back what you hate. And I'm going to make sure I keep working hard with you guys here to make this video a better place to learn and earn every single evening. And while you're down there giving us that feedback, hit that like button if you like the video here every night. Subscribe to our YouTube channel so you never miss a great video. And don't forget, if you have any questions for me, you're always, always welcome. Call the office. You know, I realize that most websites are chat bots and robots and call centers these days, but I'm old school. I didn't get that memo. I actually use the telephone to talk to my clients. So when you call the office, I'm going to answer that phone, answer all your questions, and give you the information that you need, right? I promise no wasting your time on that. So call that toll-free phone number. Use that live support tool in the upper right-hand side. I would much rather you get the honest truth from me than to go out into YouTube land or Google land where you never know what you can trust out there. So call me toll-free anytime you have any questions. But in the meantime, though, right, let's get to work here. Let's get to work. We got some work to do here tonight because tomorrow is going to be a great, great end of the week. I can feel it. We always seem to have a good Friday in our trading room every morning. Speaking of which, Friday, what's the schedule look like for tomorrow? We've got really only one news event tomorrow morning. Scheduled news event, of course, and that is the CPI number. Now, if you're in London, you've got some news coming out overnight. You get some inflation numbers coming out overnight. I think it was France, I believe GDP in London or UK. So there is some minor stuff coming out overnight in the London session, but from what I can see on the schedule here for tomorrow, that CPI number at 8:30 Eastern time is going to be the big news, at least the big scheduled news of the session. Now, are there any specific markets that we think about when we think about CPI? What is CPI? The Consumer Price Index. Another way of thinking about that would be the costs for consumers, right? Inflation. Now, whenever I think about an inflation reports, right, CPI, right, PPI, these types of inflation reports that we see quite often, these have a big impact on what? On the dollar, on gold, on euro, yen, Aussies, where all of the currencies and the precious metals are on our radar tomorrow bright and early. So make sure you've got your finger on the pulse tomorrow morning with us tomorrow early in the trade room. And then obviously I'd be lying to you if I said I wasn't expecting to see a couple more shock and awe headlines, right, from Twitter, from all the news media tomorrow about the trade talks, right? So far, it sounds like we're at a dead standstill right now, but I think everybody who's familiar with the way the world works knows that China does not want us slapping 25% tariffs. We do not want our economy slowing down because prices go up. They're going to find something. It might be tomorrow, like I mentioned earlier, and if it is tomorrow, right, we're going to hear about it. We'll see it happen. We'll update our charts, and we'll conquer it together. That's all we can do right now, right? It's all we can do right now. So we're going to get to our desk tomorrow early. Tomorrow's a Friday morning. Friday mornings are always early in, early out to begin with. Right? You always want to think early in, early out on a Friday. Got to have a good reason to be trading after lunchtime settles in, 11:15, 11:30 on a Friday morning. So CPI number tomorrow morning, right? And then again, trade talks are always going to be on the radar here tomorrow as well. And as always, don't forget, we open up our trade room every morning at 8 o'clock Eastern time, Monday through Friday. And I hope I get a chance to see you there with me tomorrow morning. Next up here, let's grab our charts. We got oil, S&P, Nasdaq, right? We're ready to rock and roll here tonight on this video. Most important thing right now is the overall structure on oil is range bound. Up, down, up, down. And as I mentioned in the introduction, in a range bound market, I want to buy low, I want to sell high, and I want to stay the heck away from that middle. The middle will always be toxic, right? It's always a very difficult place to be trading. And if you think about it this way, if I have a range-bound market, my favorite ways to trade ranges are to get up around the edges of the range. So kind of mark up those levels right there, right? Think about the edges here, right? Those edges, right, at the edges there. Find those edges. And then what you're looking for is failure patterns. So I'm going to go, I'll wait, for example, for the price to go below the range. I'll let traders try to sell it, and we'll buy back in. Or maybe we go higher. Buyers try to buy the breakout of that range, and we sell it back down. What I'm looking for here is I'm looking for specific patterns here, which I call the two-try failure pattern. So if you kind of think about it right this way, as we go lower here, the bears will try once. I look for the sellers to try twice, right? That's where that term two-try failure pattern comes from, 1 and 2. And then once I have those sellers trying to get short on this below that range, now I know where their stops are, and I can buy right into those stop losses. Same thing goes to the upside, right? Price tries to break out of the range. That's one try. I wait for the buyers to try again. Once we see those buyers have tried once, try twice, now we know where stops are, and we can sell right back into that range. Where's my target? The target is the middle, right, of that trading range, which in today's case is that notorious, right? It is a notorious number, that 61.86 level, because that is the close from last Friday, right? If you recall, here's exactly where we were you can see it right there, right? There's the closing price from last Friday. We run lower, right, on the blow up of the trade negotiations, right? We then, of course, get the blow higher here. I'm sure Trump, tweeted something, right? And then, of course, right, the news media comes back saying, no, he's lying, right? And it dumps back down. They go, no, wait a second. We're still on the table. They're still coming on Wednesday, right? And the price comes right back up. You can it's laughable, right, when you really look at this and you kind of go through, right, what happened there, because it goes to show you that all of this is just fear, right? All it is fear and greed driving it back and forth. Nothing's really changed. And sure enough, nothing's changed in the chart either, right? Nothing fundamentally has really changed in the world we live in. And therefore, unless we have some sort of stimulus in both directions, right, we're going to go right back to that same spot where we finished up last week. So now there's my range, right? I've got the range pretty easy to see here. Let's bring this down here so we can get that green rectangle down there so you guys can see where that is, right? There's your larger battle zone. So here's my trading range, right? And as you can see here, we already saw the 1, right, the 2, and the back up. So the buyers already got their failure off of that low. We're going to look for that seller to get that failure off the high, right? This is the same basic pattern except selling off the high. So at this point, we've kind of missed, well, not missed, but it happened earlier this morning, right? That rally higher, again, we see him go down. We let him sell on that, right? There's your 1, there's your 2, and there's your back up, right? Now, of course, we're getting too close to that middle. Right? So now we don't want to trade the middle here. There's not a lot of profit potential left over. I've got that trend line coming down too as resistance. It's going to be difficult for me to justify being a buyer right now when in all reality, right, I've got a lot of potential move lower with not a lot of potential move higher, right? So it's not a huge incentive for me to trade right here. And whenever I don't have a good reward for the amount of risk I have to take on this trade, it's just not a good, reliable setup. So what I want to do now is I've got that momentum going higher, right? I know where it's trying to go right now. I just don't want to buy this thing. What I want to do is I want to get these sellers to try one more attempt. That will be the ideal scenario here. I need to find some level of support that I can use to justify that trade. And I've got this great little double top right there at 61.46 that I'm watching. So basically, I've got the strong move up, right? I know we're bullish. I want to be up. Well, again, we had the earlier opportunity here to be a buyer going back into that range. Now we're too close. So I've got to get this thing going lower. I've got to get it away from the middle of that range. And to do that, hopefully we get rejected and we get that move lower, right? Something like this. Right? Hopefully we get rejected. The sellers try to sell it and I can buy right into their failure just like we saw at the beginning of today's session. Right? So hopefully we can get this price to go lower here, get that moving average coming over, get those sellers to try to sell into it. Again, it isn't a trend, it's a range day, right? It's a range environment right now. So knowing that that range is still there, now I know where their stops are. And I got two specific setups that I can look for here. One is the failure and the other is the pullback, right? These are my two favorites outside of this range. One, of course, is the failure. The other is the pullback. And again, if you kind of look left over here, you can see how that works. One try, two try, up, back, and go, right? They're never going to be perfect. We don't need perfect. We're not here for perfect. We're here for profit. So don't expect the patterns to be exactly textbook, right? Because remember, textbook patterns only happen in textbooks. In the real life, right, it's sloppy. It's slippery. It's not perfect. Somebody told me a long time ago, I can't remember who it was. He said, listen, if it looks like a duck and sounds like a duck, it's probably going to act like a duck. So if we can get that move lower, get those bears to come over here, get them to sell off that pullback. Now we can look for that up, back, and go from there. Too easy, right? Too easy opportunities there, right, to be that buyer. Another setup I'm watching right now is going to be a two-legged pullback. 1, 2, right? Draw that trend line over and then up and over, and we can use that trend line. We call these two-legged pullbacks or 2LP setups. So it's a failure pattern, right? It's a failure, 1, 2, failure into pullback, or draw that trend line down overhead, shave off the wicks, leave the body, right? And up and over and in from there. 3 different setups as we go lower. What if the market runs up and sits in here? That is the worst case scenario as far as I'm concerned for tomorrow. If it runs up and sits inside that range, it'll be a bull bias into a trading range. What do? Take the size of that range. We don't know it yet. We'll wait for it tomorrow. Take the size of that range, create your range expansion. That will give you a level of support. So kind of think ahead of time here, right? We get that trading range up here. Okay, we copy and paste it down. We create our range expansion support. Right? That gives me support. Now what do? Same basic pattern. 1 try for the bears, 2 try for the bears. Let those bears try once, let them try twice, and we're buying up from there. You'll notice I'm always focused on, in this case, being a buyer going back into that range, but staying away from that middle. Okay, if it goes and sits in that middle tomorrow, stay away, stay away. Now, what if this thing runs higher here? Then what do we do? At that point now, we still want to go back into the range, but what's the problem? The problem is momentum, right? If we get that real strong move up, right, for whatever reason, strong move up, the big problem now is I can't just sell this, obviously, because it's too much of a bull market. So instead what I'm going to do is I'm going to use this same pattern we saw back here. Strong move up, let them try once, let them try twice, and sell after their second attempt. We call these, what do we call these guys? We call these nested failure patterns, because the failure is actually, it's inside, right, of that move. So now imagine we break higher here. It's way too bullish just to sell it. And remember, because we're bullish going higher here, I can buy into a seller failure off that low. I can't do that with the same effectiveness off that high, because if I try to do that off this high, what will happen is the buyers will be waiting right there to buy into it. See, smart buyers know that the shallow pullback's probably not going to go, right? The deeper pullback is the one that usually goes, right? Just like these buyers were waiting back here, right, for that deep pullback to buy it, right? They threw the kitchen sink at that second try, right? Same basic thing here. Okay, and we'll talk about what a breakout looks like here in a second. Most important thing, though, is at that point, once I see those buyers try once I see them try twice, then I know it's safe to be a seller and I can sell it back down in. So that's the sell setup I'm looking for. And again, it's all because of this momentum that's swinging higher. Now, speaking of momentum swinging higher, how do we break out of this area? Right? What's a breakout look like? Well, let's say it does go higher here. Can I safely buy that? You can buy it only if we see one of two setups. The first one is the one that I really want the most, and that is the 1, 2, 3 breakout. Right? Now, you'll notice, if you look left here, we've had a bunch of times where strong moves up and they couldn't hold the breakout. Strong moves up, they couldn't hold the pullback, Right? So that's what we need here. We need to see this market up, pull back, grab that moving average, and go from there. Remember, if they hold that moving average, right, but they fail, I'm going to be selling it right into, right, that back into that range here. What I want is I want up, pull back to the moving average, right, and then break out. We call these 1, 2, 3 breakout patterns because they have 1, 2, and 3. The key is the third pattern is on strength. Now, what do you do with that information? Now you've got the channel. Find the high, down to the base of that move, draw off of that low, draw off of that high, bingo. Now we look good, right, to buy that pullback. Now, what's the pattern, right? What do we use for that pattern right there? If you were to kind of blow that whole area up, not literally, of course, right? You got that trend line coming up here, right? We pull back. Moving average will come over. Bears will try to sell off the moving average. We know it's a bull market, so bears should be steering clear of this at that point, right? And we are going to buy, right, off that failure. So imagine now, right, that whole area is zoomed in there, right? Expanded in that area. That's what the pattern that we're looking for. Now, where would those buyers be trying to go? Probably back up to retest those highs, right, from earlier on, or late last week, right? Late last week. No, I'm sorry, early this week, right? Back up to retest that 62.95. The bears, of course, right, they have the same potential. 1, 2, 3 for the bears. Strong move down off that high. You got it. You got it. Remember, I'm not trying to predict this breakout. I'm not trying to sell this one. Okay, that one's not going to work very well. How many times have we seen this market strong run down, can't hold it and back up, strong run down, can't hold it, back up, strong run down, can't hold it, back up. There's no reason to think that we're not going to get the same thing here tomorrow. If it does hold though, 1, 2, 3, good. Good for you, bears. Now let's make some money, right? Let's go and sell off that top. And of course, my target now, back down around that big round number at $60 a barrel. The hardest part tomorrow is going to be if we sit right inside, right, the middle of that range, because It's just, that's the magnet. That's where price is trying to get to. We don't want to trade where the market's trying to go, right? We want to get away from that area and get it back to where they're trying to go. That's where the money is made. Now, I got so much more to share with you guys tonight. I've got a lot more to cover on this, but I want to give you more. I want to give you a deeper dive into the entire trading strategy, the entire setup sequence, all the rules I use, my favorite 4 patterns. And to do that, what I'll do is I'll put a link up in the upper right-hand corner here for my free trading class. Okay, don't let the name fool you. Okay, the free price tag means nothing, right? Has nothing to do with the fact that it's filled with great value. Everybody loves the free trading course. If you want to learn more about my failure patterns, my nested patterns, my breakouts, my pullbacks, everything we talk about on the newsletter, and most importantly, everything we trade every morning together in our trade room, grab that link in the upper right-hand corner, hit that big red button right below the video tonight on our blog, and I'll see you behind the curtain inside the member section, right, of our website here at schooloftrade.com. Let's keep going. Got a lot more to cover here tonight. And of course, we got game 1, Bruins, Hurricanes, like 2 hours away right now. Oh my goodness, I better hurry up. Looking at the S&P here tonight, most important factor here on the S&P, it is a bull move up, right, into a trading range. Now, you may also say, but wait a second, what about those 2 highs right there? Didn't you say last week, Joe, that anytime we see a strong move up and a new higher high, didn't you say you could put that as a channel? You definitely can, and that could be seen as, right, a spike in channel there as well. I don't quite completely agree with this as a spike in channel, and here's why. That high right there, that was not the higher high. And you can see what happened, right? It goes up, back, up, back, up. Yeah, what is that? Those are 2 tops. Those are 2 bottoms. Double top, double bottom. Anytime I can see a double top, double bottom like that, this is a range. So we know for a fact the range will be the most important thing for tomorrow. I'm going to go out and toss on this channel just because I think there's potential it might be useful tomorrow. But really at this point, it's a shot in the dark. It's food for thought. We're going to see how the market responds to it here as we open up in the Asian session. Most important thing is the bullish bias, right, into a trading range. What does that tell me? Really very simple, right? If I have a bull market into a trading range, I already know that a range tells me what? Sell high. Range tells me what? Buy low and what? And avoid the middle, right? Sell high, buy low, avoid the middle. The only problem we have, or the only challenge we have, is the bullishness. That bullishness tells me that I can be relatively aggressive buying into seller failure patterns coming off that low. However, as we go higher here, though, for me to be a seller coming back down again, I'm going against that momentum. The only way I can really sell this thing is if I give these buyers a couple shots. 1 and 2, then I can sell, right? Once I've got all the buyers roped in, then I can sell. As you can see, right, the difference here is momentum, right? How do you know which pattern to choose? We talked about this earlier this week. How do you know which pattern to choose? It's all about momentum. If we're going with momentum, I can be more aggressive. If we're going against momentum, I've got to be more conservative. All right, guys. So that's the main that's the main component here right now. So as I look at this chart right now, I got my bull bias up, right? You can easily see here the range. I want to go down, get outside that range. Let's get this off here so it's clean for you, right? If I can get this thing down below that range, right? Get this thing down below that range. Get that moving average coming down. Let those bears sell off of it. Now we know where their stops are. I can buy right into their stops. And then don't forget, stay out of the middle. Stay out of that middle. Look for the pullback instead, right? And get in outside of that range. One of the most important rules that we talk about in our trade room when it comes to ranges is stay out of the range. If you can, you want that long to be below the range. You want that pullback to be below the range. And again, because we're bullish, bears try once, bears try twice. We're buying it right back up into the range. If it sits in the middle, right? If we come out tomorrow, we're sitting in the middle. You sit on hands, wait for the 1, wait for the 2, and then up, up, up back into that range here. Now, what about a breakout? Or hold on, how do we sell it? What if it goes up? Right? What if it goes up here? If it goes up, remember, you can't just blindly sell a bull market. Not if you like the money in your account. If you want the money to get bigger in your account, try to go with the momentum of the market. It's a good. I'll tell you right now, if I would have just taken trades off levels of support and resistance, going with the market's momentum, I wish somebody would have told me this when I was younger, right? But it didn't get through my thick skull. But if you just focus on going with the momentum of the market, and in this case, bullish momentum, buying at a support level, you're going to be so far ahead of where most rookie traders are. Most rookie traders, they don't take that momentum seriously enough, and they just look at patterns. The problem is the pattern is dependent on the momentum of the market. We've talked about this week many times already. So I don't want to go trying to use that same pattern here. That pattern's not going to be as effective in a bull market because why? The buyers are going to be waiting under here, right? They'll be waiting to buy that trap. Okay, in fact, that's one of my favorite setups for a breakout pattern. So how do we sell it? We go up, let the buyers try once, buyers try twice. You got it, right? Want to sell that sucker back down from there. But how do we break out of this? What are some options for a breakout? Because as I mentioned earlier, I think tomorrow could be a fireworks session, right? Because of the combination of the news coming out of the U.S.-China trade talks, and Fridays are typically a little bit lower volume, which means they can really move, right, a lot faster. So how do we break out? Two ways to trade the breakout to the upside. If we break out to the upside, where are they trying to go? Measured move, right, is the target to the upside right now. If we run higher here, strong move up, we call this the two-try breakout. Bears try once, bears try twice. Again, it's all based on a strong move up. Strong move up, clear through the battle zone up top there. Let the bears try once, let the bears try twice. And at that point now, you've got the profit takers out of the trade long. You've got the short sellers now committed. And now once this thing starts to make a run for it, the short sellers are stuck. They're trapped. They've got to get out for a loss. And the buyers who got out too early, they chase after it. That's why the two-try breakout pattern works so well. And again, I'm just illustrating this for you right now. You can get a much deeper dive in literally hundreds of examples of these patterns as part of that free trading course. Now, what other pattern can we use? That same 1, 2, 3 breakout, right? That 1, 2, 3 breakout. The 1, 2, 3 breakout is good if we don't get that blitz higher, right? If it blasts higher, then it's 1, it's 2, and you're buying, right? But if we don't get that blast higher and it goes 1, 2, 3, you know what I mean, right? It's not a face melter, as they say, right? It's not going to like rip your head off if you're going higher, but it does hold the pullback and it runs off that pullback. What do we do then? We mark up that high, bring it down to that low. Yep. And let's go buying, right? We're going to go buying off that, right? Off that dip. That's the most reliable way to buy that if we don't get that big blast higher. And again, if you kind of think of, right, kind of blow that area up here, obviously, right? There's your trend line there. We pull back. That pullback will come in right below the moving average. The sellers will try to sell it lower off that pullback because it will be a sharp pullback, right? And we are now able to buy into those stops, right, into that pullback, and then up we go, up to that measured move target, waiting overhead conveniently around that 2,900. Now, how do we turn bearish here? What's the best way to be a seller on this as it goes lower? First of all, can I use that two-try? I can, but I have to get a very subtle but very important change in it, right? If I get a break down here, I need to get the trap part of this pattern. 1, 2, and trap. So again, these are the more aggressive of the two breakout patterns. Strong move down, but now you've got to see a trap high on this. And the reason why you have to see a trap high is because, again, of momentum. The short-term momentum is bullish, which means as we go higher, as we go lower here, we have to assume a lot of buyers are going to be trying, especially breakout buyers. Breakout buyers meaning they're trying to buy above that high. So if I want to be a seller and I want to do it responsibly here in a bull market, I've got to wait for that little trap, wait for the 1, wait for the 2, trap, and then, of course, signal candle and in. Target, of course, that point now is down at these lows, 28.39, 28.36 area, back down to today's low of day. Stay away from that middle. Buy those lows, sell those highs. Don't forget the momentum of the market determines which variation of that pattern we want to use tomorrow. And don't forget, you can see literally hundreds of examples of these patterns as part of that free course. Grab the link in the upper right-hand corner or hit that big red button right below the video tonight on the blog. Over here on the Nasdaq right now, Nasdaq is similar to the S&P, but quite different. We have a strong move up. Right? We go up, down, up, down, up, down. What is that? That's a range, right? That is a range right there. And you'll notice how I draw the range, right? The range is not drawn like this. If you draw your ranges like that, you're going to miss out on these key levels of support and resistance above and below it. You might be wondering why I spend so much time detailing out these exact range tops and range bottoms. It's because, right, I'm going to take that trading range, I'm going to copy and paste it up, copy and paste it down, and that creates major support, creates major resistance. So when I have my range and the market's bouncing around inside of it, I know where I want to be buying. I know where I want to be selling, right? Knowing the levels is really important. You know, and I remember this a long, long time ago when I finally realized that small details really made the big, big differences. It's true, right? The small details in trading. You know, we act like, oh, it's only 1 or 2 tick. 1 or 2 tick? I don't know about you, but I oftentimes on the E-minis, right, we're going for, on the Nasdaq, 25, right, 30 tick targets. That's 10%, right? It's a little bit less than 10%. So, you know, 1 or 2 ticks is a big deal when you're going for a 10, 15, or 20 tick target. So don't be so nonchalant about it, right? Don't be so relaxed about it. Want to make sure you really pay attention to those small details because, as you can see here, I'm going to use that, right, that trading range here now to find me levels of resistance, find me levels of support. Because those support levels, those are the ones that really make a difference, right? I can get away with having a bad range, but I want to make sure I know where those levels of support are and where those levels of resistance are because I'm going to use those for my trades. So it's a range-bound market. Now, what does a range-bound market tell me here? Right? A range-bound market tells me you got it. Buy low, sell high, right? It's a bull bias. So obviously, I want to buy low on this. Now, I mentioned there is a key difference, right, on this chart, and that is this falling resistance trend line. We don't have that problem on the S&P, right? If you recall on the S&P had higher highs, okay? It's much easier for the buyers right now, right? Because now there's no threat of that trend line coming down like there is on the Nasdaq. So the Nasdaq, it's very, very similar. We still know the bears want to get back down to retest that low. We know the bulls want that measured move back up to retest weekly highs. The big problem I have right now is that trend line. Now, anytime I have falling resistance, I know it basically tells me 2 things. One, I need to look for a specific type of pattern down here, okay, because I don't want to buy into that resistance. And 2, I can use that level of resistance as a way of selling off that high. And we'll talk about these 2 scenarios, right, in just a moment. So, first of all, I want to buy low. Move up into a range, right? I want to go 1, I want to go 2, and I want to buy it. Okay, what you need to remember here is you've got that trend line coming down. So if I get a very shallow move, right? If I get a shallow move here and I'm trying to be a buyer, that's not going to be a very good look, is it? It's okay, but we can do much better than that. If I get a shallow move here, this is where it's very, very important. If I see a shallow pullback, do not take that first attempt. Wait for that trap and grab it on the second attempt. This is one of my favorite patterns whenever, and you can probably finish my sentence right now, whenever I worry about buying into resistance. What is it? It's a trap pattern. It's a trap pattern. So now imagine now we get a big move down, right? Big move down. Moving average comes over, right? The bears try to sell it. Okay, right? I can take that one. That looks great. I got plenty of space before I run into that trend line, right? To try failure pattern. However, if we just trap here, if it barely pulls back, do not take that same pattern right here, because now not only are you trading the middle, but you're also trading without a very big reward. And the lack of reward is not going to get people excited. You got to get a lot of people involved if you want to increase your odds of success, right? If I can get a deeper pullback on this, get away from that trend line, I'm going to have a lot more success on that trade because a lot more people are going to be excited about it. That big reward. When you have a big reward, you attract more traders. When you attract more traders, the law, right, that self-fulfilling prophecy kicks into high gear and you'll make more money because of it, right? So failure, back up, bears try once, bears try twice, right, and back up from there. If we only pull back to a shallow pullback though, watch out for that trap, right? Because a lot of times these things will go up, they'll pull back, and you'll get that next little trap right there, right? Call it a crown reversal, call it a trap low. Just keep in mind, anytime you have a concern about overhead resistance, you're always thinking traps. You're always thinking traps. Traps are the get out of jail free card for the bulls who have overhead resistance. Okay? Now, knowing that, I want to buy off that low. We know, how does it turn bearish? 1, 2, 3, right? Mark up that low, mark up that high, mark up the hidden channel high. Remember, hidden channel high, and then we're selling off that sweet spot. Just make sure you're aware of this, where the target is. The target's way down here. So if this thing goes 1, 2, 3, no, right? We're not trading there, okay? But if it goes 1, 2, 3, okay, now we got something we can work with, right? I can trade that. That's worth trading. That's got a lot of potential left over it. So be aware, it's going to be a lot of location on that, right? It'll be a lot of location on that as it goes lower. As it goes higher here, how do I sell it? How do I sell it as it goes higher? Very carefully, right? Push your mouth guard in first. Again, 1 try, 2 try, and here's that trend line comes in. That trend line now becomes a golden level here because I want to see it go up. Again, it's bullish, so to be a seller right now, I want to let these buyers try once, let them try twice. What I'd like to do is use that trend line almost like a flag pattern, right? So spike up into a flag. This is one of those times where, right, we almost can look at this as a failed flag, right? So we go up 1, 2, and then back down into that, right, into that trading range. Okay, then could we trade a breakout? Yes, strong move up, 1, 2, go. Absolutely, all day long. Strong move up, big strong move, right? Higher highs, bears try once, bears try twice, buying through it. Okay, I can do that aggressively because we're going what? We're going with momentum. As I go lower, I can't do that same pattern, can I? No, I've got to go 1, 2, and then trap high. Slightly different breakout pattern, right? Slightly different based on what? Based on momentum. Or 1, 2, 3, up, mark that high, mark that low, mark that level right there. There's your sweet spot right there. And again, I think I've already talked enough about what pattern you would look for. It's that failure into pullback combination as we go. Remember, the one deal killer tomorrow is if we sit inside that range, sit on hands, 1, 2, back up, 1, 2, back down. And don't forget, guys, I'm going over all the small details right now. We're going to do it together tomorrow morning in our trade room at 8 o'clock. Okay. Might want to get the kids out of the room for this one. There might be some bad I'm kidding with you. This is a pretty ugly one. This is a pretty ugly one, though. I may have to resort to some cuss words on this one. I'm kidding with you. Going back in time, obviously, right? We get that bull move. We get that trading range. Okay. Now that trading range tells me buy low, sell high, right? Avoid the middle. Where are we right now? We are above the highs. I want to be a seller going back down to retest that low. Okay, I want to go back into that range. Now, there are 2 problems we have. One is a very easy to see support trend line. That's a big problem. Now remind me, guys, what was the best pattern if I'm worried about selling into support? Traps. You got it. I knew you were paying attention the entire time. Once we know we have that trend line, that tells me now exactly which pattern I want to look for. Right? I got a level of support in the way. I don't want to sell low. We look for a trap. The second clue, of course, let me zoom in here. The second clue, of course, now is this big, right? This big jump up, right? That big jump up. Now, what do we know about that? We know that anytime we see a strong move in one direction, what happens? We almost always get a second leg. So we've got two concerns. We know we have a range. We know we want to go back into that range. That's the easy part, right? The hard part is how do I sell this thing with that support level and with that big green blast, right, that we saw earlier? So what we need to do is we got to get that trap, right? Beautiful, beautiful setup. Imagine almost, right? Imagine if it's a bull market, right, into a range. This will break it down pretty good, right? It's a bull market. How do I sell it as it goes higher? 1, yeah, 2, and then back, right? That's the pattern that you want because you're going against the momentum, okay? Now, once we know that pattern, we also have this trend line coming in, right? Got that trend line coming in. So now, what specific variation of that pattern do we need? A trap. You got it. I knew it. Good job, right? So we know that momentum is too strong. We got to look for the 1, the 2, and the go. Okay, we got that going already. But again, we layer this on now. We know we have that trend line. Bingo. That tells us trap pattern, right? Two important clues. It's no wonder now. It's no wonder these guys aren't dropping this thing like a fly right now. It's no wonder it's not sinking. Nobody wants to trade into it. Do you want to trade that? No, right? No, we don't want to tell that. Now, we go up. We've got 1. We've got 2. I could sell this right now, but then I'm going against momentum. Then I've got that trend line right there. So what's the better way to do it? Better way to do it would be, let's get that trend line coming down. Let's mark that high, right? And let's just get up. And since it's, let me zoom in a little bit closer here for you. There you go, right? We go up, we pull back 1, we pull back 2. Beautiful. There are 2 ways to do this, okay? There are 2 ways to do this. One is strong signal candle and you're in. Okay, just be aware though, if you just use the strong signal candle, you may get a little bit of a trap up and then back down. What I'm looking for is on a faster time frame is to see those buyers come over again, see them try it again so I can sell into their failure. Right? We'll kind of combine a trap with a buyer failure back down as we go. Okay, this is very, very advanced, right? This is about as advanced as it's going to get. So if you're following along with me right now, my big hats off to you. Very good job, right? We want to go back into the range, right? I want to be a seller, but I've got this big blast. So I got to let it go once, got to let it go twice, then I can sell. Oh, but wait a second. We have the trend line. Anytime we don't want to sell into support, what's the best pattern? Best pattern is a trap. So we want to see that trap pattern here as we go. The aggressive sellers are getting in off the trap, right? The more conservative traders are waiting for that second try on a faster time frame and selling into it from there. No matter what, you're focused on selling off the high and staying away from that trend line. Now, what if the buyers take it, right? What if they run this thing higher here? What do we need to see here? One would be the 2-try breakout. Where's my target, by the way? Target's up top, right? Target's up top. Where's my 2 breakouts, right? One would be strong move up, 1 try, 2 try, go. Now remember, you got to make sure this one is really as low as you can get it, right? You don't want to take that up here. That's not it. You're too late, right? Blast up, 1, 2, go. Very strong move up, strong move up. Right? And then, of course, always make sure you get a good signal to be the buyer on it. Or it's the 1, 2, 3, much easier pattern. 1, 2, go. That creates your hidden channel. And again, we're grabbing that failure into pullback, right, off of that low. That combination setup that we talk about so often on this nightly newsletter. Now, what if the market drops, right? What if we drop here? Get that off there, right? What if we drop? Okay, what if we drop here? If we drop, measured move off the high, battle zone down here, there's my range. If we end up collapsing, what's going to happen? It's going to be a very bear market at that point. What's the best way to buy when the market has a very strong bearish momentum to it? You got it. To try nested. Strong move down, right? Imagine now, right? News comes out, right? Thing tanks. We run down, right? That's one hell of a bear market at that point. I'm not going to be able just to sell or just to buy it. So instead what we'll do is, right, we'll wait for them to try once, wait to try twice, and go. Great example back here. Strong move down, one try, two try, go. Right? Strong move down, one try, two try, go. Right? Anytime we see those strong moves, these are obviously right inside the range here. We don't want that location, but that's the basic pattern. Right? That's the basic pattern. And again, right, I'm just illustrating these for you right now. Tomorrow we'll do it together, and you can see hundreds of examples of these setups, right, inside that free course. Grab that free course. In the meantime, though, let's wrap it up tonight, right, on this euro. Euro is in a very similar situation. Okay, here we are now. Bull market into a trading range. Okay, it's a bullish bias. There's no doubt about it. Whether you want to call it before the range, after the range, it's a bull bias. Okay, we also see they got their one leg, they got their two leg, and it was almost like this price action was on a string. It went up and comes tumbling right back down. So we know that although we do have a bullish strong move that should try to retest these highs, it's pretty easy to see the writing on the wall right now. These bears want to go back to their warm, comfortable cave here inside that trading range where they pretty much have spent all week. Two problems: rising support trend line, right? Two problems: rising support trend line. Two problems: bullish market. Same thing as gold, right? We know we have the one, we know we have the two, but who wants to sell that? I don't want to sell that. No. Not going to work. Not a very reliable trade because of what? That rising support. So instead, we'll look for that one, that two, and what I'm looking for is that trap, right? Get that trap. That way, I'm not selling directly into that level of resistance. Level of support. And then again, if we can make it back down to retest that low, it's going to be a very strong bear market at that point, right? So imagine now we do go up, trap, and collapse back down. It's a very strong bear move at that point. Right? We let them try once, we let them try twice, and we're buying back into the range. Remember, stay out of the range, stay out of that middle. Okay, that's the no trade zone for a reason. Or we get that 1, 2, 3 breakout, mark up the new hidden channel. You got this, right? And we buy the low of that channel. Or strong move up. We're bullish, so I can use that 1, that 2. Now, here's the deal. The euro is a very popular currency that loves those big round numbers. So the goal of this would be, as they go higher, really to get to that big round number. Normally, it'll kind of slide through the round number by a little bit, but you can't really guarantee that. So what you want to think about is you want to try to get, if you're going to get that breakout, up 1, 2. What's the best pattern when I don't want to buy high? You got it, traps. So an easy way to think about it is anytime I look overhead and I go, oh shoot, we're bullish, I want to be a buyer, but I want to buy into what I assume to be the objective up here, right? I'll look for a trap pattern. Same basic idea, bears try once, bears try twice, but because the need for that trap is there, I'll wait for that lower low, buy off that lower low. Boy, oh boy, we have covered a lot in this video. Euro and gold are very, very similar. We are waiting on more headlines tomorrow, right, out of the U.S. and China trade talks. And boy, as always, guys, we are going to be live in real time back in our trade room tomorrow morning, 8 o'clock Eastern time, like we are always. We've prepped the charts. We prepped the plan. We got the mindset ready. We know those two big rules we don't want to break for tomorrow. And of course, I hope I'll see you there with me tomorrow morning at the opening bell, 8 o'clock Eastern time. Don't forget, as a member here at School of Trade, you get access to our trade room, all of our ongoing trading sessions, and everything included. It's all listed right here on our website. So stop by the website here at schooloftrade.com. Check out that advanced course right below my ugly mug. And if you're not ready yet to join me as a member, grab that free trial. We've got the best free trial in the business. Right to the left of my ugly mug, you'll see that free trial button. Grab the free trial. That includes a free pass for our trade room as a guest, and also the free course that you can learn more about our 3-step strategy and all my favorite entry setups. Don't be a stranger, and don't be late tomorrow morning, guys. Those fireworks start kicking off early tomorrow on a Friday morning. So get out of here, get a good rest, right? Get a good night's sleep tonight. Be back tomorrow morning. Hoping I see you guys there tomorrow morning in the trade room at 8 o'clock Eastern time. If not, we'll come back and do it again next week. Same time, same place. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.